Welcome to Phillip Futures Weekly Market Watch. I'm Han Qiang, investment analyst from Phillip Futures research team. This is a chart showing world crude oil prices. Crude oil is traded in a global market. Prices of many crude oil streams produced globally tend to move closely together, but there are persistent differentials between crude oil of different quality, as you can see from this chart. Crude oil prices can be affected by geopolitical events. These events have the potential to disrupt the flow of crude oil to markets. Much of the world's crude oil is located in regions that have been prone historically to political turmoil. Several major oil price shocks have occurred in the past. They are namely Arab oil embargo in 1973, the Iranian Revolution and Iran-Iraq War in the late 1970s and early 1980s, Iraq invasion of Kuwait in 1990. More recently, there are disruptions to crude oil supply due to political events in Nigeria, Venezuela, Iran, Iraq, and Libya. Given the past history of oil supply disruption, investors are always assessing the possibility of future disruption and their potential impacts on crude oil prices. This is a chart of world energy consumption projection made by US Energy Information Administration, US EIA for short. Crude oil prices can be affected by change in crude oil demand. US Energy Information Administration forecasts world energy consumption to grow by more than 50% in the next 30 years. Total world energy consumption will likely rise from about 500 quadrillion thermal units in 2010 to about 800 quadrillion thermal units in 2040. Much of the growth in energy consumption can be attributed to emerging countries like China, India, and ASEAN. The Organization of Economic Cooperation and Development, OECD, consists of United States and much of Europe. These large economies consume more oil than non-OECD countries, but they have much lower oil consumption growth. Non-OECD consumption rose the most in the past decade, with China and India having the largest growth in oil consumption. Rising oil consumption can be attributed to the rapid economic growth and population growth in these countries. The recovery of economic growth in emerging countries will likely be reflected in higher crude oil prices in the future. This is a chart comparing the change in OPEC production target and change in crude oil prices. OPEC stands for Organization of Petroleum Exporting Countries. The axis on this chart represents year-on-year percentage change. Crude oil prices can be affected by change in OPEC production targets. OPEC members countries produce about 40% of the world's crude oil. Because of this market share, crude oil production by OPEC is an important factor that affects crude oil prices. This organization seeks to actively manage oil production in its member countries by setting production targets. Historically, crude oil prices have seen increases in times when OPEC production targets are reduced. Crude oil futures are standardized exchange-traded contracts in which the contract buyer agrees to take delivery from the seller, a specific quantity of crude oil at a predetermined price. You can trade crude oil futures contract at New York Mercantile Exchange, NYMEX. NYMEX light sweet crude oil futures prices are quoted in US dollars and cents per barrel, and they are traded in lot size of 1,000 barrels. In this session, you are presented with three factors that affect crude oil prices. They are geopolitical events, change in OPEC production targets, and change in crude oil demand. These three factors determine whether you buy or sell crude oil futures to capitalize on subsequent price move. This is the end of my presentation. For more information on crude oil futures contract, please approach my representative from Phillip Futures for further discussion. Thank you. Tune in next week for Phillip Webcast.